All right, live again. Quick update here, oil market, getting a lot of text messages, emails, tweets, Patreon messages from people who want an update. Crazy stuff. Never a dull moment with all the nuts, all the different crazy things going on. We are witnessing history here. So the front month of the oil futures contract, the May contract, it has gone negative for the first time in history. The June oil futures contract is not negative. I spoke to hedge fund manager Tavi Costa of Crescott Capital, who I interviewed on Friday. The interview was released on Sunday morning. If you have not done so, there is incredible insights in that interview about the oil market. So not everything crashed related to the oil market. This is mostly the May futures contract and problems with that, with the oil market fundamentals, problems with storing the oil, because of all the oil tankers, even oil super tankers now. I have stories about this that just came out. This story came out yesterday on Sunday from The Guardian. Super tankers drafted in to store a glut of crude oil. So the perfect storm of bearish, negative, bad news in oil is continuing, but it's mostly for the futures contract. Again, the oil stocks, companies like Chevron and others, did not crash. Shares of Chevron are down, I think, only about 3.5%. I'll just pull it up here real quick. Yeah, Chevron's only down about 3.92% today, or $3.42 a share. Chevron did not crash. Other oil company stocks did not crash. And this has to do with the divergence that hedge fund manager Tavi Costa was talking about in the interview I did with him on Friday that was released on Sunday morning, how more contrarian, value-oriented professional money managers, contrarian investors, contrarian speculators are starting to, now they're not buying full positions, they're starting to dip a toe in some of the more quality oil companies, your Chevrons. ExxonMobil is not quality right now with their balance sheet, with what they've done. Chevron just sold some more assets for cash. So I like what Chevron is doing there, selling assets for cash rather than what ExxonMobil is doing with how much debt on the balance sheet ExxonMobil has added in just the last month. An insane amount of long-term debt added to the ExxonMobil balance sheet. Yes, it's relatively cheap debt, but if the oil bear market continues for a while, and there's a lot of evidence out there now, whether it's China in Focus YouTube channel or others, that the perfect storm of bearish news is continuing with the second wave of coronavirus outbreaks in China, all over China, outside of Wuhan and other provinces and cities. I think even Hubei province has warnings out. According to the China in Focus YouTube channel that was interviewing people inside China and then also translating a lot of posts from Chinese social media and from Taiwan. So that's going to hurt oil demand. Oil demand is still collapsing. I have tons and tons of articles if you want to look on this. The other problem is if people take delivery of that oil futures contract, where are they going to store the oil? On top of that, you also have anyone who was stupid enough to have bought oil futures contracts on margin, expecting a rally in the oil price, that they got their stop. They had enormous margin calls and they had their stops blown out. That is very common in the futures market, where you have the investment banks and high-frequency trading algorithms, especially the investment banks using high-frequency trading algorithms, because they can look at the order book and they could see how much margin, if you're a small player and you bought any futures contracts on an oil margin, they can see how much margin you used and they could just blow out your stops. It's very, very common, happens all the time in the gold and silver markets too, happens all the time to the little guy playing the futures market, why they should not be doing that. The other major thing, as you can see there on your screen, so I think it's a combination of factors here. HFT, normally when you have this much of a move in a market like this is a high-frequency trading algorithm, flash crash involved, you have margin calls. But the other major thing, talking to hedge fund manager Tavi Costa before I just turned on the live stream, was the USO rollover contracts problem. So the rollover yield, there is even articles for free on Seeking Alpha talking about this. I have extensive articles behind the paywall for my Patreon account contributors over the last 3 or so weeks about the USO, problems with the USO. There are enormous tax disadvantages to buying and holding the USO. Now, yes, the USO may go up a lot more in the long term. However, each month there is enormous amounts of headache with the USO with tracking error, and hedge funds intentionally scalp for at least a week while USO rolls over their futures contracts, and it looks like that this is happening now. Tavi Costa said that the USO contract rollover is the May part of the futures contracts which crashed are the ones that USO was buying. So this is a USO related problem. Let me look up a chart of the USO. The USO is down right now minus 11.52%. So the USO is down the most of any non-futures contract related oil stock or oil ETF. That's what it looks like. Let me take a look at some of the other, for a more general view of the oil market. Let me take a look at some of the other oil ETFs. So OIH, which is the Van Eck Vectors Oil Services ETF, I think they did a reverse, only down 1.97%, so that did not crash. Transocean, which is a deepwater offshore drilling rig company, those shares are dangerously low, starting to price in bankruptcy from what it looks like. I haven't looked at the bonds and how much of a haircut their bonds have, but those shares are only down 2.1% today, so those did not crash, but those are already very, very low. The share price is so low for Transocean, it's not looking good for them. Seadrill did not crash either. Seadrill only dropped 4.66%, but those shares are 57 cents a share. Again, I predicted this a while ago when I was looking at Seadrill's balance sheet. Longtime listeners to my podcast know I was warning about Seadrill for well over a year now, looking at their balance sheet and all the problems once they reemerged from the first bankruptcy. The debt to equity ratio for Seadrill and the debt to cash flow ratio for Seadrill were way out of whack. So if you would have looked at the balance sheet for Seadrill a year and a half, 2 years ago, you could tell that if oil prices did fall, Seadrill was probably going to go bankrupt again. That's how much of a disservice the restructuring of Seadrill was. Schlumberger or Schlumberger, which is the oil service company, did not even drop 1% today. So this is going along very similarly to exactly what Tavi Costa said in the interview that I released on Sunday morning, that the oil stocks are starting to firm up. So yes, the oil stocks are not going to go up a lot, but it looks like they're not going to also crash too much. That smarter money is starting to build positions. Maybe they're just small positions, and they're starting to accumulate on dips. Now, are a lot of people all in on oil? I wouldn't be all in on oil personally, in my opinion, but there are people that are starting, professional money managers, contrarians, hedge fund managers, value investor oriented types, who are starting to build positions in oil stocks. So it is small and they're dipping a toe. I think the best way to describe it would be that they're dipping a toe in. Okay, so let me just read one of these Reuters articles that came out in the last day or two describing the low oil market. Okay, so a key benchmark of U.S. oil prices plunged to a 21-year low on Monday amid continued fears about oversupply of the market. U.S. West Texas Intermediate crude futures dropped it's way over 37% now. The steep fall in the price is because, this article came out hours ago, steep fall in the price is because of the lack of sufficient demand and lack of storage place, given the fact that the production cut has failed to address the supply glut, said Naeem Aslam, chief market analyst at Avitrade. Also, we had a Singapore oil trading firm get charged, it looks like, accounting fraud in the last few days. So Singapore oil trading giant files for bankruptcy after hiding $800 million in losses, secretly selling loan collateral. So they sold the oil and other oil products that were pledged as collateral. So letters of... I have the article here from Madhouse News that came out a couple days ago. I'll put it in the information and description section. There's already a record 160 million barrels of oil that were stored in just the last couple weeks. This article came out on Zero Hedge a few days ago on April 17th. Oil prices have been under pressure since late February amid fears about oversupply in the market, and they said slumping demand. I call it collapsing demand due to the coronavirus. US oil prices have been particularly hard hit, with high fixed costs in the shale industry. Also, deep water's gotten killed. Canadian oil sands has gotten killed. Russia and Saudis are lower cost producers, but their budgets were set at $40 barrel oil or higher. And we're nowhere near there. The whole thing's a mess. So you have all these hedge fund managers all doing the super contango trade. Tavi Costa also said that the trading of the futures contracts is working on smoothing out the contango. So it sounds like what he told me, that he's shorting one of parts of the oil futures curve. RR says the tankers are full, no more storage left for oil, and that's why they've switched these other tankers, these super tankers, drafted in to store a glut of crude oil. So ships able to carry 2 million barrels chartered for $335,000 a day to store oil unwanted during the global pandemic. Giant oil tankers are being used to hold record amounts of crude at sea due to a global oversupply that threatens to overwhelm the world's storage facilities. A record 160 million barrels of oil has been stored in supergiant oil tankers outside the world's largest shipping ports, following the deepest fall in oil demand in 25 years because of the global pandemic. These so-called super tankers, which can each hold up to 2 million barrels of oil, are in high demand by oil traders as conventional oil storage facilities have quickly filled up with oil left unused during the global pandemic lockdown. The last time floating storage reached levels close to this was in 2009, when traders stored more than 100 million barrels at sea before offloading stocks when the economy began to recover. Charter rates for giant vessels that can be used to store oil have more than doubled in the last month to reach highs of $350,000 a day as traders scramble to find space for crude that cannot be sold onto refineries. The refineries are also cutting back production a lot. So the refineries, which do store some oil there, they're cutting back production. Some of the refineries were offering oil at a discount. The Saudis are still offering oil at a discount to get rid of it. They have so much they can't store it. One thing that I did see that was interesting was here on Seeking Alpha, they had a news update that Bank of America actually upgraded the oil refining company Phillips 66 because of valuation, and they like how Phillips 66, which is PSX, so PlayStation X, how they cut their gasoline production and other crude oil products. So they got upgraded on valuation, and they think that the lower oil price will benefit refiners, the lower the stays. Now, the problem with that is still demand, the demand problem. So I don't know if I agree with that. But normally the oil refiners do well in the past when oil prices are falling because it's cheaper energy inputs for them to make gasoline and other products. But the problem is still demand. So refiners have to cut back how much they produce. And the refiners even have no storage space. They're totally tapped out. I've seen articles for a month now that the refineries that Chevron, ExxonMobil own are just out of storage. Those storage problems are just growing like crazy. So we're definitely witnessing history here, but it is only the front month. Oil futures contract, the May month. The June month is fine. The June month right now is, let me hit the refresh button here. I'm on tradingview.com. You can follow the futures market for free there under the energy tab, futures and energy. It's at $21.02. So it is down. The June contract, I think, is down 16%. But it has not crashed like the May contract. The May contract is down 276%. My God, that's unbelievable. The chart's just ridiculous. You don't even believe it if you didn't see the chart. Minus $32.25. People, rich people, are getting paid to own oil with futures contracts. If they buy the oil and store it. Although I don't know where they're going to store it now at this point. We're running out of storage space. Okay, super chat from my friend Jesse. Will the USO implode? I don't know if it will implode, but it might go down more. Again, the tracking, I've warned now for weeks. For my patrons at length, there's a ton of details in 2 articles there over the last couple weeks about tracking errors in the USO, about tax disadvantages for buying and holding the USO. The USO is taxed very similarly to GLD and SLV There are no long-term capital gains taxes if you are an American citizen for buying GLD, SLV, and USO. And I believe also you have to file, if you own USO, I think you also have to file a K1. So it's a nightmare for your tax professional, even a CPA. When I used to own some MLP stocks, and I owned some a long time ago, I got charged a really large tax bill. So it's an enormous headache. And I had a CPA who had been doing stock taxes for over 20 years, like 30 years or more, doing my taxes, and he wanted an extra almost $1,000 to handle the K1 documents for owning a master limited partnership. The headaches are just not worth it. So I've been warning about USO. I really don't like it that much. It's probably worth, there's safer ways to play it. There's always the tracking error and the tax problems. Even if USO goes up in the long term, you still don't lock in long-term capital gains. So you're not going to get, if you're an American citizen, that 10%, I think, long-term capital gains tax, which is the lowest tax of buying and holding. One of the best benefits for buying and holding something. You don't get that with owning units of USO. Rob says oil can be stored in swimming pools. Perhaps. But then your swimming pool might be flammable then. What's the outlook on tankers, especially Frontier? I get asked this a lot. I will eventually, after the Q1 earnings come out and we have more data, I will do an article more in depth for Patreon account contributors. Because the tanker companies are charging a lot more. Cuppy, who is very smart, I've listened to his thesis, I've read his articles on this. He says that the tanker companies are selling at 50% of net asset value. Well, if you look at the financial statements for the tanker companies, I care about profitability, I care about free cash flow. And if you look at a lot of the financial statements for a lot of these oil tanker companies, you can tell through the financial statements, whether it's the statement of cash flows or the income statement and the balance sheets, that these are horribly run companies. Horribly, horribly run, most of them. Horribly. No matter what oil price environment, no matter what part of the cycle, these companies, a lot of them lose money. They are just horribly run. If the financial statements are that bad, you can tell. So if something's selling at 50% discount to net asset value, I would say, well, can the assets actually generate any positive cash flow? So net asset value doesn't always tell the whole story. These things might be a trade. I would want to see some more data from these oil tanker companies from the first quarter earnings to see if what they're charging now, the lease rate's doubling, if they're actually going to make a profit. Because if they're going to wait, if the management teams are going to screw this up, and judging by the financial statements, the odds are pretty high that a lot of these management teams are going to screw this up, then these are not good long-term investments. These are trades. These are 6 months, 12 months, maybe, in my opinion, 18-month trades. We're going to get a nice pop, and you're going to dump these companies because they're horribly, horribly run. And management will find a way to screw up the business. But again, I need to see more data because the lease rates are up a lot for these tanker companies, and they should be, in theory, on paper, minting money. But the reality is that the gold miners should have been minting money when gold was at 1900. But that's not exactly what happened for a lot of the gold miners in 2010 and 11. It's not exactly what happened for the silver miners when silver had a big run in 2010 and 11. So to answer your question, right now, they're a trade. I do not think, in my opinion, they are a long-term investment. I would have to see more data to see if management is actually doing a good job with the doubling of the lease rates. And I will save that analysis for my Patreon account contributors. We'll go through the financial statements there. I'll write some articles on at least one or two of the tanker companies. I was debating doing a tanker report, but I'd have to charge a lot more for that. Obviously, I can't charge $5 a month for extensive tanker report research. There's firms out there that charge thousands of dollars for reports like that. I can't sell that at $5 a month. I can't spend 80 hours, 100 hours or more going through all the financial statements and writing up analysis for those companies and charge $5 a month. I don't think anyone can, actually. Michael says he asked MBR Neighbors Industries. I'm not familiar with the company, Michael. Sorry. Thank you for the super chat, though. I'm not familiar with the company. Dimitri asks, thank you for the super chat. Isn't it super bullish for gold? Well, first of all, the June oil futures contract did not crash, so we have to watch that to see if it does crash. It could. The June oil futures contract might crash too. I'm sure some traders are going to be betting on that now. Did you listen to the interview I did with Nolan Watson? We went through the benefits of lower oil prices for certain gold miners. So Nolan Watson said in that interview that lower oil prices benefit the low-grade open pit mining companies that use all those Caterpillar and other another construction company earth mover trucks, because those things waste enormous amounts of diesel fuel. They get only a couple miles per gallon because they're hauling tons, literally a ton or two per run. These trucks are running nonstop and blow through tires like crazy. Each tire, I think, is at least $5,000 each, and they blow through the tires like crazy. So these open pit mining operations, they have like a 12-hour crew. If most mines have like a 12-hour crew, so they have like a day crew and then they have a night shift, and these mines are blowing through diesel and truck tires like crazy. So the open pit gold miners would benefit the most from low oil prices. So not all miners are going to benefit equally from low oil, low diesel prices. So you would have to check to see which gold mining companies own open pit mines that use the most fuel. And those are the ones that are going to benefit right now the most. So like Kirkland Lake Gold, I think the new acquisition that they just bought, Detour Gold, I think that mine's open pit. So that's going to benefit them. That's going to benefit their other mine. Fosterville mine is an high-grade underground gold mine. That's not going to benefit that mine as much, but it's going to benefit the new mine that they just bought, the Detour Gold mine. Jesse, it's tough to say if USO will actually implode. But the tracking errors and the tax disadvantages, I just stay away from it. In my opinion, it's avoiding it. There are other ways to play oil. I would rather lock in long-term capital gains taxes. I would rather not have tracking error every single month. I would rather not get an extra $500 or $1,000 tax bill each year from my CPA. Okay, so I have all these articles here that are open. I'm not going to read them all, but they'll be in the information and description section. I just wanted to do this short little update. It's a confluence of factors, talking with Tavi Costa, hedge fund manager from Crescott Capital. I got an update from him before I put on this live stream show. But again, go back and listen to the interview, what he said on Friday that I released it on Sunday morning about the oil market. So the oil stocks, most of them did not crash. It's mostly the U.S. The USO seems to be the only oil ETF or oil company that had any problems. All the other oil company shares did not collapse with the May futures contract. Now we have to watch the June futures contract and see if that collapses too, because so far the June futures contract has not collapsed yet. Okay, one more super chat here before I go. Tomcat asked, does seasonal changes also play a role with oil and natural gas? Example, maybe a couple harsh cold winters for a while. So for oil, heating oil demand, cold winters, that affects heating oil demand. For natural gas, cold winters, that affects natural gas demand. For gasoline, it's summer driving season here in the US, and look how many people are actually driving. So that has collapsed. So the seasonality for oil, normally summer, is a big gasoline demand usage time frame. That's some of the largest amounts of gasoline usage here in the US is summer driving season. When families go on vacations, when kids, college kids have spring break and drive to the beach or go on short getaways. That's not happening. So that's why you see the oil refiners cutting their gasoline production, their refining production, their petroleum product production down a lot. You see the Saudis discounting the stuff they've already sold. Some of the oil refiners, I covered this over the last month, they were heavily discounting. So right now, a lot of the oil companies, the lower cost producers, your EOG resources, those stocks, let me just check it real quick, but I don't think EOG crashed. Yeah, EOG didn't even drop 2% today. And if you look on the chart, EOG looks like it's trying to put in a bottom since mid-March. It's been trying to put in a little bottom here in a trading range. In the low to mid-30s, trying to put in a bottom. They are one of the lowest cost producers here in the US. They don't have a lot of debt on the balance sheet. Management team runs a really tight ship. They do not have any spendthrift in their budget. They don't have a fancy headquarters. They run a very efficient company. One more super chat. He says, my percent net worth is 50.42.8 in cash, realty, physical gold. Planning on buying 6% Sandstorm this week. Recommendations. In my opinion, well, first of all, I can't give recommendations like that. So I don't know what your financial situation is. Otherwise, how much debt you have, how much cash you have, what your job is. So I don't know all those different variables to your financial situation. But as part of your exposure to gold, you should own some in my opinion, you should have some royalty and streaming company exposure. Franco-Nevada, Royal Gold, Wheaton Precious Metals, Sandstorm Gold. Osisko Gold Royalty is more of a risk. Mavericks Metals is pretty good, but a little smaller. I don't like any of the smaller royalty companies, and I don't like the royalty companies like Altius that have too much exposure to copper and base metals and potash. I don't like those. And in the past, Altius has had way too much debt on the balance sheet. Albert says no shale company is going to go bankrupt. They're all going to get bailouts. I haven't seen any proof of that. Although Trump did direct a lot of the SBA loan money to Texas, a disproportionate amount. I covered that yesterday. So there is no summer driving season, which would be bullish for oil demand. That summer driving season is gone that we normally have. So normally seasonally, we're entering the summer driving season where oil refiners are creating more gasoline, preparing for enormous amounts of gasoline demand increases, and that's gone. Again, oil is still a falling knife, but it does look like some of the oil stocks are catching more bids, and smart money, more contrarians, people are thinking a couple years out, are starting to dip a toe in and build positions. Are they going all in? Absolutely not. I would not be all in on oil. We could easily see demand continue to collapse because there's a lot of evidence of second waves now in Singapore, parts all over China. I heard on Twitter other countries too, but I haven't confirmed that from anywhere else. I just heard that from a couple of people on Twitter. Quake Addict says Peter Schiff was wrong on oil. A lot of people were wrong on oil. They didn't see what was happening in China, how China got shut down 2 months ago. I was warning about it. Well, more than 2 months ago, end of January. There was a oil podcast behind the paywall there on my Patreon, warning about Whiting Petroleum going bankrupt at the end of January. Probably next is you're looking, if you're going to go do individual research, maybe I'll do a Patreon account article on this. I'll think about it. You're going to look for higher cost oil producers with too much debt on the balance sheet. The next logical one, probably, I mentioned this in the oil podcast, was Oasis Petroleum, because they're in the Bakken too. They're higher cost. So Oasis Petroleum, my educated guess, Oasis Petroleum might be one of the next ones to go bankrupt. Because the Bakken is much higher cost. They're paying a higher transportation cost. They had a lot of debt on their balance sheet in the past. Okay, well, that's it for this short little update. I want to thank everyone for listening. Thank you very much to my over 700 Patreon account contributors. Shout out to George Gammon if he's listening. He's really helped me market my YouTube channel and my Patreon, grow my tiny little small business so I can focus on content research, information analysis, and financial education, and focus on different companies, different markets. I actually was planning an oil update article. I didn't think, I was planning on an oil show, but I didn't think that this craziness would happen, so I just hopped on and did a live stream update. The major problems appear to be out of USO. Okay, USO, out of any of the oil companies or oil ETFs, USO is down a lot. There are even USO warning articles on Seeking Alpha. If you're considering USO, read those. There's also, if you want to pay $5 a month, there's 2 USO warning articles in depth. There's a lot of stuff on them in the last couple weeks on my Patreon, warning people, maybe you should think about selling your USO or don't buy it.